Here, on the back of the production, we have this tender, pink tender. It's a global roadshow. We start today in Sydney, then we'll move to Hong Kong, and then to New York. It's a very niche market. I mean, those, you've seen it before, absolutely magnificent. All the tender will close on the 10th of October. At that point in time, the lucky ones will know which diamonds they can get and so on and so forth. This is the kickoff of a fantastic tender.
Explain to us the biggest one, because I understand that that is a record in terms of what's come out of the Argyle diamond mine.
That's right. So if you look at lot number one, you know, we've been doing this tender for 34 years now, is the largest purplish red diamond ever. It's a magnificent piece. And the story is, it's interesting because it was coming from a larger rock. And in fact, we were able to cut 2 diamonds out of it. One is lot number 1, which is here, and the other one is lot number 9. So you could say you got the mum and the child. Magnificent couple of pieces. If I were to make a bet, I think both of them will go as one lot and so on and so forth. So there are some very unique pieces here. 2017 tender was very good, and we have high expectation that 2018 should be even better. It's a very scarce resource, very niche market. And by the way, what people should know, which is I think an interesting fact, is the largest market for us is the US, but around 25%, a quarter of all the pink diamonds will stay in Australia.
We've seen a lot of global miners, I guess, consolidating the assets that they hold, consolidating the commodity classes that they hold. Is diamonds something that you see as a long-term proposition for Rio Tinto? Is it an asset that you want to hold on to?
As I said, I mean, we believe in diamonds. The question is to find the right mines for us. So just to give you a sense of how difficult it is, if I use copper as an example, between the time you find a nice rock with a nice color coding and you have a mine, it's on average 25 years. In diamonds, it's more than 30 years. So it's very difficult to find. And that's why we've been working on the case for some time, and we are putting our exploration teams globally under pressure. I won't tell you where we're looking, because otherwise I don't want this to leak to our competitors for obvious reasons, but we're putting our exploration team under massive pressure in order to make sure we can find a new diamond mines for the future. So do I believe diamonds should have a place in our portfolio of assets going forward? The answer is absolutely yes.
How do diamonds compare to some of the other commodity classes? Are they, I guess, essentially recession-proof? Do they follow the same boom-bust cycle that some of the other commodities, like the bulk commodities like iron ore and copper, follow?
So they have a different cycle, but today the demand, what I can say is for the diamonds you can see on this table, the demand is very, very strong. Am I concerned about all those diamonds to be sold for the right value in the coming weeks? The answer is absolutely not. Very scarce resources, finite resource out of Argyle. The demand is very strong. They will be sold for the right value.
Final question for you, just globally, on what's transpiring with the global economy and this escalation and trade war. Does that make you concerned? I know that, of course, the US is ratcheting up its rhetoric against China. From where you sit as a global miner, is it a concern to you?
All right, it's a very good question. So let me step back. There are 2 key drivers for the mining business. So I'm not talking about Rio Tinto, I'm talking about the mining business in general. One is GDP, and GDP growth is pretty strong across all geographies, or most geographies, should I say. And the other one is trade. If I use Rio as a proxy, 90%, 9 out of 10, 90% of all our products move from one country to another. So trade is very important for us, all right? Now, I'm always the optimist in the room, in the sense of if you reflect on the last 30 or 50 years, growth was primarily driven by trade, and everybody acknowledged it. So if you have any kind of conversation in China, in Canada, in the US, in Australia, you hear the same, is people believe in trade. However, a few people recognize or acknowledge that it's not always seen as being inclusive, as being fair, and so on and so forth. So what we are doing is just inviting all the people to sit around the table, put the issues on the table, and resolve them. I believe common sense will prevail. Trade is good for everybody, but it has to be seen as being inclusive and fair, and today it's not the case. So we really invite everybody to work on the case and so on and so forth. The impact on trade so far for us, none. However, we're watching this situation very carefully. That's why I've been to China a few times already this year and 5 times to the US, to make sure that we put our case forward in the best possible way and hope that, as I said, common sense will prevail as quickly as we can.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.